Hello, everyone, and thank you for joining today's video. However, before we do begin, I'll need to show the disclaimer. Then once I do that, we'll get started right away. So just read over this for a few minutes, and then we'll get started. All right, welcome back, everybody. This is part 2 of the EurUsd analysis from yesterday. So I want to do this video just to show you guys. I think the analysis I started yesterday was at this candle right here. So it was at this one. So yesterday, this candle was more of a pin bar. It was the high was I think right around down here. And I mentioned that this is the reason why we wait for a candle to close. We don't want to trade off the pin bar when you're in the middle of a candle. You got to wait till the candle closes to see, because it obviously did not close as a pin bar. So, but my analysis yesterday was I wanted to see price come back into this level here between the 50 and the 618 level, which is this is zone. However, when price hit this level and rejected when it was showing the pin bar, it was enough because we have this support level right here. So all I needed was an entry candle formation to buy the market, and I wanted to take price up into this level here. I wanted to get at least a 1 to 3 risk versus reward, but I wanted to get in and out right below this level here, because if you remember, if you watch the analysis from yesterday, you'll know this black line right here was a support level. I'm sorry, resistance level based off of, so we're on a 4-hour chart. So off the daily, it was this double top right here. Which was the resistance level. Then we had the 272 extension, and then which is one of my profit targets I use on certain occasions. And then also this level here where the arrow is, this is the top part of the double bottom, which you guys know that this is the equal distance from the bottom of the double bottom to the neckline. So it moves a lot to this level. So you can see price went all the way up, broke this level here into the 272 and just right under that level before it fell. So it went right to the zone to where I wanted it to go. And then now it's coming back down bull or bearish. So if we come back to the daily, if we zoom back out to this, I want to show you the 4-hour first, because that's what we were looking at. So let me get rid of this arrow, clean this up a little bit. So let me get rid of this Fibonacci level here as well. So on the daily, you can see price did go right up to that level and tested this. So yesterday, my analysis, we were an overall downtrend, broke the previous lower high and made a double top, and then made a higher low from this low. But it's not really considered a trend change until this high is broken. So this high has not been broken yet. Even though price broke above it, it hasn't closed above. It's rejected at this level. So we would need to see a clear break above and clear close above this before we would consider this a higher high and a higher low. So since price has rejected this and formed this really nice pin bar here, I will look to sell this market on the open. Since it's Friday at almost 3 o'clock, the market closes just a little over 2 hours. So I'll look to sell this as long as this closes as a nice pin bar like it currently is showing now. I'll look to sell this at the open on the Sunday's candle. At the 50% level at this. So in order to find that 50% level, all you gotta do is zoom out a little bit, draw your Fibonacci levels on it. That's the easiest way to do it. Come down and there's your 50% level. So I will look to enter right here. My stop loss will be just above the high of that candle. And then I will look for a 3 times my risk. So we're at a 1.4, so I'll move this down to the 3. As long as it gives me the opportunity to. So right there will be my profit target. I'm looking for price to come back. This is a kind of a little bit of a support area here, but this is the one I'm looking to take out. So I'll get out well before that. So this is where I'll look. If price does come back into the retracement of the 50%, I'll look to get in, stop loss here, and then I'll look for take profit down here for a nice 1 to 3 risk reward. So So that really is, like I said, it's just an additional analysis from yesterday just to close it out to show that Fibonacci levels, how amazing these things are when you use it in conjunction with something else. When you use it with confluence, you never use Fibonacci's by themselves, you never use candles by themselves, but when you use all this stuff in confluence with each other, that's where it makes the strategy very, very powerful. Also, if we look here, as far as this profit target I was showing you, if you run your fibs at the bottom of the low to the high of this swing, right to that 618 extension. I mean, perfect, right to it, and then it came right back down, which is also meeting with the highs of these. So that's another reason why you want to have several areas of confluence, because we had 3 areas of confluence, and in this zone were to take our profit. We don't want to let it run with this. Doesn't mean you can't. I mean, if you want to hold it for a long term, you can very well do that, but we're not holding this thing long term. We're swing trading, so we want to get in and get out within we'll hold trades, you know, anywhere from a day to a couple weeks, but this type of trading here, I really want to get in and out within a day or two. So, but before I end this, I'm going to come back and I want to show you guys how powerful this is, as far as if you do like trading double tops, double bottoms, and head and shoulders. You need to incorporate this into your trading if you're not already. So you can see here where I've got these lines drawn, these two, it's just an equal distance. This here is an equal distance from this level to this level, which is all it is at the bottom of the move to the neckline. So this is equal to this. You can see price come right up to that level before it started falling. If we come back and look at these, here's a double bottom. This is the equal move from the bottom of the double bottom to the neckline. This is the equal distance. And look what price did. When price broke that neckline, it come right to that level, and then it fell back. Here's the head and shoulders. There's the distance from the top of the head down to the neckline. Here's the equal distance. Price came down and hit, and it came down a little bit further before it rejected. Same thing on this double top. Here's the equal distance. Price broke, came down, and it hit that level before it went up. So you can see here, and the same thing happened on this double bottom. Price came right up to that level, and then it rejected it. So if you're not using this as far as where to project your targets when you get into trade, you really want to incorporate this into that, because it's extremely powerful and it will definitely improve your trading. So if you want to know more, we've got this in our members area as a strategy on how to trade double bottoms and double tops and the head and shoulders and things like that. Basically pattern trading. The market moves in waves, and it follows these patterns on a consistent basis. So when you add that in with all of our other price action strategies and ways to trade and to analyze the markets, it will really make you consistently profitable. So any questions? I'm gonna end the video now. Like I said, wanted to make it a short video just in addition to yesterday's analysis on this pair. So any questions, hit me up in the chat or through email, and we'll see you guys later.